The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the January 15th terrific Thursday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who knows that each of us should always be pioneers of our future versus prisoners of your past. Let's make sure that you and I, in doing so, have an extraordinary Thursday. Hope everyone out there had a wonderful Wednesday. Let's make sure we do everything in our power to have a terrific Thursday. Of course, the easiest way to do that is to always remember that in life, things happen for us. If you can just simply focus on that things happen for us, not to us, you can make all the shifts in the world. Because you see, that means you can find the good in every set of circumstances that the universe is going to throw at you. Hey, these markets out here, nothing like circumstance that the universe throws at it. You know, last night early this morning, about 4:30 this morning, at the Swiss National Bank unpegged their currency to the euro. That has sent markets all types of things all over the board. So we're going to take a look at what that means. We'll get back to just taking a look at the patterns that are in place. In any event, I am absolutely grateful for your presence here this morning, so thanks for checking in. I'm absolutely here to serve you as well. That means all you got to do is pick up the phone, give me a call at 877-927-6648. Internationally, you can also reach out to us at 727-445-1044. That way you and I, we can be Lewis and Clark. We can be explorers out there. This is Terrific Thursday. Of course, it is none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show right now. Dow futures are pointing up 35 points. They're trading at 17,400. S&P futures up a couple points, trading at 2,010. NASDAQ is off just a tad, trading at 41.41. King dollar back at 235 ticks or so, trade out at 92.11. You've got movement in the currencies out here, so we'll take a look at that. Goldilocks up $20 last night. That was one of the reactions that we saw based on the news inside the Swiss franc. Silver, not so much, up 7 pennies right now, trading out at 17.06. So I guess with silver not doing much and gold being up, maybe a little bit more of a fear play. How about light sweet crude? It has formed a bottom, no question about that. At least an intermediate term bottom. We're going to go find out about the resistance area that it's trading into, and that if it can close above, it'll be more than just a 2-day rally out there. We've got natural gas. Had a big day yesterday. A nice day this morning so far, up a couple of percent out here. Quick peek across the globe, what we're going to see over in Germany. You've got the DAX. The DAX is up right now 150 points, up 1.5%. So we want to check in on the DAX. The FTSE is up 0.5%. Over in Asia last night, green arrows across the board. The Nikkei was up nearly 2%, up 300 points. The Hang Seng up 1%, up 238 points. And the Shanghai up 3.5%, up 119 points. That was a big move inside the Shanghai. However, in our markets, we're up really big at about 4:29 a.m., maybe 4:30, but then things just really fell apart. Now, with regard to the Swiss franc, because I asked this question: how many of you can you pull out all the Swiss francs in your wallet? Yeah, you can't. How about in your drawer? Maybe a couple. Well, now I take that back. This is an international show, so I do know that we stretch around the world. So there are some that actually do have some Swiss francs in their wallet. But let's just say for all of the folks here in the United States, for the most part, nobody's too worried about the Swiss franc. Now, the Swiss franc does impact the U.S. dollar index, but just in a small way. In fact, of the 6 currency pairs inside that basket, it's number 6. It's 3.6% of the weighting. The Swedish krona. And I'm not talking about the Corona that you put a lime in, although those are good, but they're not a part of the U.S. dollar index out there. The Swedish krona is 4.2%. Of course, it's the euro that's the biggest weighting. That's about 58%, 57.6 to be exact. And then you've got the yen at 13.6 and the pound at about 12%, just under 12%, and the Canadian dollar just above 9%. So you've got a number of currency pairs that are impacting the U.S. dollar index. Okay, so now that we've got that out of the way, our history lesson, Let's go see what's going on in the markets. And so where are we going to start? Let's start by taking a look at, let's take a look at the Dow. So let's take a look at the Dow on a daily basis out here. We're going to look at the Dow futures, really what I should say. And if we take a look at this morning's action in the Dow, so we're actually, 4:30 this morning, the Dow futures were up as high as 17,533. Now, after the news out here, we've seen the spread on the Dow goes from 17,533 all the way down to 17,190, 350 plus points or so already is what the spread is today. Of course, we had that same kind of spread yesterday, so to a certain extent, nothing new out here with regard to big moves. So what do we know about the Dow futures, that is? Well, one of the things that we know is if we come back here to the trading session of January 6th, and we take a look at that candle session, the very next candle session, we had a bullish reversal signal, a little bull sash candle out there. What that means is that the low of the prior session, it'll be the low of either of these two bars out here. That means the low of the prior session, in this case, January 6th, is a level of support. Now, on the Dow's way down yesterday, didn't create any kind of bullish reversal signal whatsoever. All it was doing is, in essence, testing a level of support set up by January 6th. What else was it doing yesterday, and what else has it done today? Well, what it's done, it's tested that beautiful TAS market profile support level, that demand level at 17,262 area. So at this stage, what we know about the market is levels of support have been tested over the last 2 days. A lot of time left in today's trading session. No telling what kind of fireworks we're going to see out here. And I do mean no telling what kind of fireworks we're seeing. At what the market is indicating to both you and I is that the market should go back down and at least test these lows. Now, what we also know is that the actual swing point that is also being, in essence, tested here is December 16th. Now, the top of that swing point, price is trading above it. So that swing point has been tested. You can see also another bull sash candle. This is a daily chart that we're taking a look at. And so price is above that swing point. Quite frankly, if you see a close today above that January 6th area, at a minimum, we ought to see the highs tested. And the highs that I'm talking about, are not necessarily just the January 9th high. I'm talking about the highs all the way back here from December 26th. So we'll see how today plays out. Now, that's what the daily chart is showing us. If we go take a look at a 120-minute chart, let's go do that. Let's see if there's any patterns that are out here that we should be focused on. And if we take a look at patterns, so to speak, what I would be looking at, and we could have done it on the daily chart. Maybe we'll do it on the 300-minute chart out here. Excuse me, it'll just be a little bit easier probably to do that. So for our man Saratoga Bob, I don't know if he's in the Tiger's Den out here, but we'll take a look at that 5-hour energy drink chart. Now, on the 5-hour chart, what it does show is that this morning's action, okay, when we take a look at that real punch down, that punch down began, as I say, at about 4:30 and got down to the low. What it has created also on the 5-hour chart is nice big hammer candles. So these lows out here are being defended by buyers. There's absolutely no question about it. You can say, hey, Steve-O, how do you know that? Well, in a 5-hour chart out here, what we can also see is yesterday coming into the close. So, between what time period? Between 2 p.m. and the close yesterday. Nice big bullish engulfing candle. That's where the body wraps around the prior, in this case here, green body wraps around the prior red body. And then we've got a hammer candle. So this 17,250-ish area, it's really the lows. I'm just using the market profile out there, is a strong level of support. If that level gives way, the question would be, okay, where's price going to head to? Well, what I would say is we'd look at the A to B equals CD to the downside out here. And that 1-to-1 A to B equals CD says 16,989. So very possible what we could see is a big spike down in that area. It doesn't have to take place today. Could take place tomorrow. But there is not a completed A to B equals CD pattern. I would prefer to see that and then be able to say, hey, look, with regard to these bullish candles out here, we've got a significant low that is being formed. I don't know if we've got that just yet, at least not by taking a look at the Dow charts, and therefore I don't think that necessarily anyone knows that here just yet. Now, a different story, a total different story, we take a look at the S&P 500 as an example. In fact, usually I wait to do the indexes into the next show we're going to change that up here just for a moment, because if we go take a look at the S&P, let me punch that up on my chart here. I'm going to get rid of this small little trend line here because it doesn't really have that substantial of a meaning. If we take a look at yesterday's candle out here, yesterday's candle inside the S&P creating a hammer candle. Now, the reason why that's so important, you can see all the way back here, if you look back on October the 15th, when the market made a significant bottom, it too had formed a hammer candle. So hammer candles are something to absolutely be focused on and paying attention to. Of course, longtime listeners know our expression here: if you close below a hammer candle, if you're long, you're wrong. And what that means is that that price would then move down to the next level of support. Now, in the case of the S&P 500, that next level of support is just simply the prior swing point out there. And the prior swing point that we would be looking at is really just back down to the December 16th area. So even if we see it close below that hammer candle low from yesterday inside the S&P 500, that number, by the way, is 1988.44. That's going to be a key number to be watching. If it gets tested today and gets rejected, that's bullish. That's positive out there. We see it close below it, we can expect one of two things will take place: either a test of the December 16th area. That low, by the way, inside the S&P 500 is 1972.56, and or if we see it close below that, some form of an A to B equals CD to the downside, whether that's 1-to-1, 1 to 1.272, 1 to 1.618, 1 to 2. It could be any one of those. The 1-to-1, by the way, is 1963, so that's the most likely. The 1 to 1.272 takes you to the 1935 area. But yesterday, very important trading session. We don't care how it happened. We don't really care how it got there. What we do know, what you and I do know, is bulls are out here defending this territory, even with a down market yesterday. Because you see, the bulls and bears, they cannot hide when it comes to a stock chart. Their role is to leave signs. Our role, yours and mine, is simply to be able to read those signs. And reading signs is what we want to do. Now, to try to put this in a little bit of perspective out here. So what we do know is that with regard to the Dow, both on a daily and on that 5-hour chart, we know there's some pretty strong support out there, some pretty strong bulls hanging around. We also know by taking a look at just the cash index, the S&P 500, that yesterday was also an important trading session. Now, when we come to the currencies, because of all of the things going on inside the currency, because of the dislocation, look, from high to low in a period of just a few minutes. I don't know, the move inside the Swiss franc was like, if you were trading that, was like 25 grand, 28 grand, $29,000, somewhere right around there. And just so, I mean, those are big dislocations. And with it being a big dislocation, I'm uncertain as to, maybe you're more certain, but I'm uncertain as to how this all plays out today. So then we just simply fall back onto what it is that we do know, what it is that we can control, and take a look at the pattern. So it becomes easy to go take a look at what we did yesterday as a starting point. Now, with regard to currency markets, we go take a look at that Euro-Japanese yen. Now, the Euro-Japanese yen, that actually is trading much lower this morning. So always a bit that's off of its lows out here, but also trading lower, trading below a hammer candle that it formed yesterday out there. We'll see how this closes today. With regard to whether or not a bottom is being formed inside the Euro-Japanese yen, its low to be watching today is going to be 137.01. You're at 136.75. If this trades lower, our markets ought to trade lower as well. This is Steve Rhodes. This is TFNN. We'll be right back. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, so one of the things that we can do, and there's so much to take a look at here this morning, so no lack of things for us to look at. If we just take a look at the world markets out here, so the chart that I've got on my screen out here, hopefully you're watching us on Tiger TV. If not, you're listening to us in the on your radio or your mobile device at tfnn.mobi. Let me describe to you what it is that we're looking at. The top portion of my chart is the chart for the DAX. The center portion of my chart is that for the FTSE, and then the bottom portion of my chart is that for the S&P 500, which obviously this is the cash index that has not started trading. Will in about 5.5 minutes out here. But if we try to see now, when we take a look at the correlation of markets, you can see by looking at the screen, we've got, in essence, these are three great correlated markets. You know, who's the dog, who's the tail? I don't know. What I can tell you is out of the gate at this stage of the game, you know, the DAX, the FTSE, they've been trading for many hours. Now, if we take a look at the DAX specifically, because I would say the DAX chart, to me, I don't know about you, that means the top portion, the top panel of my screen, looks very similar to the bottom panel of the S&P 500. Its message is that it's already back up at its swing point high. So the DAX made a swing point high, looks like on December the 5th out here. That's when it's swing point, and it's trading inside it as we speak right now. So the DAX is trying to take out its highs out there. Does that sound like good news if you are a huge bear in the marketplace? No. Doesn't make sense to me out there. So what this is also signaling, so we got a nice bullish reversal signal yesterday, little hammer candle. It's been tested. Actually, it was a hammer candle that was also on the daily chart here for the ES Mini. It actually was also a hammer candle. So just so you kind of get a feel. And that low, by the way, has not been tested. At least has not been tested here just yet. So yesterday's candle, both inside the S&P 500 as well as inside of the ES Mini contract, two hammers out there. Now, we don't have a hammer candle in the DAX today. Looks like a hammer, smells like a hammer, but there was no downtrend out here. But the DAX is up at its high. So is that a message for the markets? It is something for us to focus on and pay attention to. Now, I want to take a look at gold. Gold's reaction last night, because of the displacement of what was going on in the currency market. It only makes sense that people run to hard currencies out there when you've got different devaluations going on. So what we do know about gold is this. Number one, as we speak right now, it is up above its swing point. Its swing point from December the 9th at $1,239. You are up above it. You're at 1253. Its next move is 1275. We know that gold has broken out of a descending trend line out here. Gold looks to be, unless we see gold just give it up today, and again, until these markets really start trading, and we just simply put the move by the bank, by the Swiss bank in the background. It'll be in the background, by afternoon, it'll be in the background out there. So unless gold fails at 1239, which would be the third day in a row if we were to do that, the expectation ought to be that gold is on its way to 1275, 1305, and then I say 1343 out there. And that is the likely move inside of what's going on inside of Goldilocks. With regard to light sweet crude, yesterday or the day before, we started taking a look at the light sweet crude contract. Looks like right now I've just got the continuous on my screen, so we'll put that out here. What I had pointed out a couple of days ago was that it looked like light sweet crude. This chart looks very similar from a pattern recognition standpoint to that of natural gas. And that is this, that it is making it, or did make its seventh inning stretch candle. That's 7 Chapman wave counts to the downside out there. I love those 7. I love just the seven wave counts. If you just were to trade one of those patterns out there, that is a great pattern because it's so easy from a stop management standpoint. Now, that doesn't mean that you change your position size. Stop management and position sizing, two totally different things out there. If you don't get your head wrapped around that, you're going to run out of capital pretty quick. Now, what we also know here is we got the 7th inning stretch candle to the downside. That took place on the 13th. Yesterday on the 14th, because of its move, it actually formed a bullish reversal candle called the Morning Star, the Three River Morning Star, named after one of our guys in the Tiger's Den, Oda Nobunaga. Maybe it's the other way around, because Oda Nobunaga, one of the 3 generals that unified Japan, he's a bit older than our Oda inside the Tiger's Den. So you got a bullish reversal signal. We had price relative strength divergent pattern. Price was moving lower, did it on less relative weakness out there, and now we got the bullish reversal signal. Remember when we were looking at this pattern, and that was back here on January 13th, what I said was the real key level was going to be in that $50 area. Because, number one, it was going to give you about a 10% move inside of light sweet crude out here. Now, the reason why we're looking at that $50 level is because that happens to be the 13-day exponential moving average. That's that little dotted line going across my screen out here. We haven't seen crude close above that in a long time. In fact, last time it was above it was on September 29th, 2014. If it closes above that today, or it closes above 50.39, I say we have more than just a little bottom. We got a pretty decent counter-trend rally underway inside Texas Tea. This is Steve Rhodes from TFNN. Here.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 50 points, trading out at 17,477. S&P is up 5 at 2,016. Composite up 12 points at 4650. Russell 2000 up a couple of points, leading the charge. The upside, you've got the Junior Nugget out here, the daily, I think it's about 300% ETF. You've got Nestle's on its way up, but gapped up this morning, up about 6%, up $4. Pioneer Natural Resources up $3. Rand Gold up $4. Mohawk Industries up a couple of bucks. You've got the GLD is up. Amazon is up out here. Of course, you did hear a foghorn. That foghorn coming from the top of the world headquarters for TFNN as they are fogged in this morning. Being fogged in, let's take a look at some things here that are moving to the downside. You've got eHealth, EHTH is a ticker symbol off 54% this morning. That is not good news out there if you are a holder of that. I don't know what the reason is behind here, but I don't see anything. Let's see here. They're out with their numbers. Well, that's one of the reasons out here. You've got Insulet Corp, PODD, is a ticker symbol. That's off 21% this morning. Best Buy down 14%. Boy, we've got some big movers to the downside. Dust getting dusted this morning off about 13%. BlackBerry down 15% off about $2 out here. Citigroup down about 3%. Goldman Sachs down 1%. Dow right now up 14. So expect a bit of a wild ride out here. Let's continue to monitor that wild ride so we took a look at gold. So we know where gold's level of, we know what gold has done. We took a look at that euro, Japanese yen. Let's go take a look at the euro. So speak about movements out here. In fact, the currency markets are moving so fast. Let's go actually over to the futures contract because I got a 15-minute delay here. And 15 minutes in this market right now could mean a whole lot. So I got the live futures contract out here for the euro. And it has the potential today to form a hammer candle. What we know about the euro is this, two things. Right? Number one, we're taking a look, we're monitoring the A to B equals CD down pattern on the daily chart. That's off of the swing point out here from October the 15th. That's your A. Your B point's down here on November 6th, and your C point is up here on November the 19th. So we now know that what we are at is we're at the 1 to 2 A to B equals CD to the downside. That price projection was 115 and change. What we got to was 115 and change this morning. Now, we do not have any kind of reversal signal whatsoever inside of the daily chart. So this A to B equals CD pattern that can continue on its way. And also, the overriding factor is really the weekly chart, because the weekly chart is one that has the priority here. That priority says calling for what? I think it was $1.09, $1. Where is that A to B equals CD? Let me pull this back out here. Let me pull this back. You pull this back even further, because you see this level here of one. We talked about this yesterday, and we'll do it again today. 1.1661, and we're at 1.1671 as we speak right now. That's really the last bastion of hope for the euro, because if we see a close below that, then we've got the larger A to B equals CD to the downside pattern. That vanished from my screen. We're going to go ahead and put that back up here, because this is the one that gives us that price projection as to where the euro is very likely headed to. Now, what I expect is, and that's at the 1.1119 level. So the real key here for the euro is this 116. I must be on my monthly chart. So let me switch over. It's going to be easier for us. Look, the system is acting a bit slow because there's a lot going through it here this morning. Let's switch to the monthly chart here. For the euro. There we go. So that 116 area that we're looking at, that happens to be the swing point lows from back in 2005, the month of November. So that is 1.1661. If you start to see the euro trade below that, it really tells you that that 111 area becomes the first target. Quite frankly, the way that the euro has been moving down, if it breaks through that way, what the price projection is and the way that it's moving at this stage, it really brings us into a play out here as a potential is par. 1.033 out there inside of the euro. So at this stage, we'll continue to monitor the daily chart. We'll certainly come back to it tomorrow to see how it is trading. But at this stage, and that goes, and the reason to take a look at that is with the euro moving down out here, you're going to have the U.S. Remember, we took a look at the U.S. dollar index. So this morning at 4:30, a lot of dislocation of currency markets out here, trying to figure out what. Now, of course, the central banks, I presume that they knew what the Swiss central bank was doing out here. But still, you got a lot of dislocation, traders trying to figure out what to do. So with regard to light sweet crude, we were taking like that light sweet crude. I'll put that back up on my chart here just for a moment. And that way I can answer an email that came in here. Light sweet crude is not off to the races until it closes above at least 50.39 out there. It's got to get above that 13-period exponential moving average. Remember, light sweet crude has not closed above that since September. So we know that that is it's been tested a few times. We know that that is a substantial and is a significant level of resistance out here. And it's not above that area. So it is not off to the races. And it is especially not off to the races because of its correlation to the U.S. dollar index. And so when we take a look, and that's why you've got to also study the euro, because if it's waiting inside the U.S. dollar index, and that's how you really put those two things together, because a stronger dollar is going to go ahead and put some pressure on light sweet crude. And we know that by taking a look at that other chart that is that at least you and I pay attention to. Let's see here. Where now, of course, I've got to find the bugger. Where is that little bugger? I just have too much out here, but it's right here. So here's no, it's this chart right here. I've got two of them. It's this chart right here. This is the chart here that shows light sweet crude up at the top shows the Canadian dollar, U.S. Canadian dollar down at the bottom, shows the Mexican peso as the third panel. The reason why I show the Canadian dollar and the Mexican peso is because it has a direct correlation as well to light sweet crude. And at the bottom is the U.S. dollar index inverted, and it's inverted there so that we can take a look at a stronger dollar is moving down, and that way it correlates to the direction that we take a look at in light sweet crude. And that is out there. That correlation is out there. The correlation between the S&P 500 light sweet crude, that is anybody who focuses on that is just simply nuts. They're just out of their mind. They're really not looking at a chart out here. But the U.S. dollar index, a whole different thing. So with the euro up against significant support levels and taking a look at light sweet crude, I don't want people to start trying to jump on, because we took a look at that seventh inning stretch pattern inside of light sweet crude, because we took a look at a couple of bullish reversal signals. It's really got to clear those moving averages before you start to see anything more significant. Can it do it? Yeah, it can do anything it wants. Has it done it? The answer is no, it has not done it whatsoever. Now, so that takes care of that commodity. That takes care of, take a look at the euro as well to see what's going on. We know where we've got bullish support out there, so we know any close below the hammer candles inside the S&P futures, inside the S&P. We know what that means to us. That means going down and testing the lows from back in December. That would be the minimum. So we really have the whole playground really laid out here. In my opinion, it's pretty easy. We just have the playground. We got the blueprint laid out here so that we can sit back and watch to see what actually takes place inside the market. So now let's go take a look at some things that are moving in the market, some additional things that are moving in the market. Let's take a look at natural gas. So natural gas having a huge day yesterday. I mean, an absolute huge day. So we took a look at some price targets here inside of a natural gas. The very first one was the 0.382 retracement level. That was at $3.21. Well, the natural gas closed at it yesterday. So in essence, in one day, really 2 days, but we're going to call it in one day, it made that first price objective. And that first price objective, by the way, that's just of the C to D leg to the downside. And that's really what I'm focused on here right now. So what natural gas also has done here this morning, very close to it, hasn't actually done it, gotten up to its TAS market profile resistance level. This is where the sellers should be hanging out. That's at $3.31. The intra-session high so far, $3.29. Okay, so that's a pretty good area of resistance. If you see it close above that, that tells you that we've got a change in polarity. There, we've got a shift. And what you really got to be focused on is this little gap, my opinion, is this little gap out here between the December 9th and December 22nd, that little weekend gap out there. Nonetheless, it's an important gap. And if you're long natural gas via UNG, know that you're up against support. Real resistance, I should say. Know that the strength of the candle yesterday, though, is so strong that I wouldn't recommend getting out of the position, but you want to look for natural gas to at least hold the $3.08 mark for any kind of a retracement out there. Now, that $3.08 could be the place where you would want to load or get into a trade on natural gas if you were so inclined. I shared with you yesterday the seasonality chart. Remember, that seasonality chart says that natural gas typically doesn't make a low until February. So be careful. Buyer beware, so to speak, out there inside of natural gas. Let's take a look at some things, some individual stocks here that are moving in the market. Let's go take a look at some of the gold equities. Let's start off by taking a look at Rand Gold. GOLD up a nice $4.67 this morning. If we take a look at what it's doing, it's already up above the 1 to 1.272. A to B equals CD to the upside. That says it's off to greener pastures. The next green pasture out here for Rand Gold should take it to about $82.72 out there. That is your 1 to 1.618. A to B equals CD, and also get you back into the August 29th swing point out here. That top is 84.35. That's what's going down the inside of Rand Gold. If we take a look at Gold Corp out here, remember Gold Corp needing to get above a resistance level. It's just trading at that resistance level right now. That's the resistance from the downdraft from October 30th. That's important just simply because of its weighting structure inside of the GDX. So that's going to impact your nugget trades out here. You want to see Gold Corp clear and close above 2142. Hey, you're at 2154 as we speak right now, but that 2142 is an important level. Really now, because of the key reversal session. What's really key that you need to see Gold Corp close above is 21.99. That really becomes your benchmark out there because that now is, in essence, a resistance level. So there's 21.42 to, what did I say, 21.99, I believe, 21.99. That's your resistance area for Gold Corp out here. How about some non-gold stocks that are moving? We've got, let's take a look at Best Buy. BBY is the ticker symbol, off 15% this morning. Let me see, what's behind the news out here? They reported holiday revenues. I see a number of different things on my screen, but this thing is really, so their revenue, Best Buy 9-week enterprise revenue increase 2. Let's just take a look and see what the sellers are doing inside this equity. And the sellers are there, 9.4 million shares to the downside this morning inside of Best Buy. Best Buy's got a high volume low, but it's been tested, so price does not necessarily have to get back there. But the swing low that it's likely headed to with this morning's gap down with volume is probably the October 15th level. So that would take you into the 28.80 to 31.05. You're trading at 33.52 as we speak right now. Let me pull this back a little bit further. Let's put this on a weekly chart. I think that's the only thing that I can do here. So let's put Best Buy. BBY is the ticker symbol. Let me get rid of that A to B equals CD pattern. Not interested in that as we speak right now. So you have a little bit of a trend out here inside of Best Buy. You know, all that Best Buy really did is kind of interesting when you put it on the weekly chart. What it really does is it gives you the flavor and the feel for what it did. See, Best Buy, and you know, we teach you to buy breakouts or sell breakdowns. Well, in the case of the breakdown, that really began the week of January 6, 2014. So a year ago, when Best Buy was up at, the high was $40.45. That very next week, the air came out of the balloon, big time. Volume-wise, it was 177 million shares to the downside. Price made its way back up to this level. Didn't actually hit 40.45. It got up to a high, it looks like 40.03. 40.03. Shoot, it looks like last week it made a round number high. How did Basil not pick up on that $40 even Steven round number high out there? Nonetheless, it gets back up to the area where it broke down. And what is it doing again as we speak? It's breaking down. Really suggests that in the case of Best Buy, the October swing point, that's going to be your first target. 26 million shares there. Shoot, you're moving into it with 38 million shares. You're not there yet, but that price level of 32.18, you're not that far away from it. You're at 33.64. So if you move into that swing point with volume, says a low should be tested. That is $28.80. That's what's going on inside of Best Buy out here. If we take a look at, let's see, what else percentage-wise? I'm trying to, this eHealth, we can go look at eHealth just for the heck of it. I was going to say something else. It's the first word before you say giggles. Something in giggles out there. That way, but I'm on radio. I can't really be doing that. eHealth. This looks basically horrible. It's trading now at $9 or so, and it's trading all the way back into the 2008 level out here. Can't say that there's a whole lot of people in the money on this equity. So I know this is nothing known by any of our tigers out here. So that's a good thing. We won't spend any more time on eHealth out there. I do want you to spend time on your health, and that means I want you to tune in tomorrow to Nico and Paige at 12 noon because, you know, TFNN has got one of the best health shows out there. If we take a look at what else is moving, 27% to the downside, Insulet Corp. Apparently not insulated very much from what's going on inside its stock. Ticker symbol here is POD, P-O-D-D out here. We get back from this break. We'll go take a look at POD. Anything else that you'd like as well. Our call number 877-927-6648. Dow's off 66, S&P down 9, Composite up 28. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 48, S&P down 6, trading out of 2004, composite up 28 points. If I switch over real quickly here, take a look at the longer-term chart. The weekly chart is really what I should refer to for the S&P 500. Let me just expand this out for you for a moment. We can see a couple of things. Number one, the long-term trend. We're still in an uptrend, a confirmed uptrend. If you come back to the lows back in October of 2011, trend line has not been busted at all. In fact, it's just been reinforced. It was reinforced back in October when the October lows were being formed out here. most recent October lows. Now, we've got the S&P 500 trading right at its horizontal trading range, a boundary line out here. 2006 is the number. You're basically trading at 2004. So this should be a pretty decent bottoming area. We tested that level last week. It was tested and rejected back at the December 15th lows. It was tested back, in the first week of December as well. If we do see a break of this area, and the break, by the way, would mean a close below 1972, then what's likely to occur is a test of that trend line. So you want to put that trend line on your system, whether it's a daily or weekly. Make sure that you go back to the swing point that is of importance, and inside of the S&P 500, that'll take you back into October of 2011. But this is and in January, the market is going to make it's going to make a substantial low. A significant low, the low for 2015. I know I'm one of the few with only one of the few with that outlook out here, but you guys pay me to have conviction, and so I've got conviction out here. That we're going to see a low. I just don't know if it's right now here today. What I'd really love to see, if you're asking me what I'd love to see, a big, huge flush. I'd like to see a big move to the downside today. The bigger, the better. To me, that would flush it all out, and that then probably puts in the low a bit earlier than couple of my models show. But we're really right now in that range, so we're inside the range of what my models suggest we should be seeing some type of low. Will it be today? I don't know, but I do know just the opposite of what many might be thinking out there. If you see the market just boom down, crushed to the downside, you're going to be thinking that Steve's going to change his mind. So now what I've done, I've set the expectation, the anticipation. What Steve's really looking for is that big thrust to the downside out here versus the market. Even though it made hammer candles yesterday, I'd really like to see those candles get tested. And if we see it close below it, that's okay. It just says that the bottom is near out here. And that's what everything I'm looking at still shows and still suggests to me as we speak right now. With regard to things that were moving the market, I did mention POD before we went to that break. PODD is the ticker symbol. This thing here gapped lower this morning, big time, big volume, 2 million shares behind the move here this morning. We've got to put this to a longer term, put this on a longer term time frame to get a feel for where this thing is trading into, even if we can figure that out here. looks like POD, if it closes below and it's trading below the swing point from back here in August of 2014, that says that POD, P-O-D-D, can easily head back into the, I guess the $16, $17 range out here. Well, the top is $20.75, the low is about $18.86. You're trading at $29 as we speak right now. So you got the Dow's off 70, S&P is off about 10 points, the composite down 38, gold's up $23 as we speak right now. Still tons of movement inside of the currency market out here as it tries to figure out what to do. The Euro-Japanese yen towards its session lows. Our markets, they will follow that currency pair. That's what leads. Its currencies rule the world out here. Folks, it is Terrific Thursday. If you're off to start your day, have a great day. Thanks so much for joining us. But stay tuned, because hour 2 of the Trader's Edge show is up next. Otherwise, I'll see you bright and early tomorrow morning. Have a great day, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You're watching Tiger TV.